Hey, what's up, guys? So this is going to be the first video in Pillar 1. I want to go over top-down analysis. How do I go through the stocks I'm looking at? How do I identify if it's worth me trading or not? And the stock that I am going to do is a stock that I traded this last week. It was VRAX. So there's a couple things that I want to note on here because how I trade is differently than how the beginner should be trading. So, one of the things is the float. It is 4 million float. This thing is a little bit under the red flag criteria. So what I did is I used half size. The short float, it's under 30%. That's the absolute cutoff. If it's over 30%, don't trade it at all. Institutional ownership has to also be under 30%. It does have some capital. I have no idea what the monthly burn rate is. And I don't remember if it had SSR on the day that I traded it, honestly. I don't think it did, but I really don't remember. No, it did not have, because looking at the chart, yeah, it did not have SSR on the day that I traded it. But it has 12 gap stats. Nine of the 12 gaps closed red. And so for me, I'd be looking at this, but okay, well, I can trade this, but I'll have to go in half size because it's under 5 million share float. And for me, that doesn't mean I can't trade it. It's just, it's not ideal. It's not worth using full size on. So even if the setup did show a good potential for a trade, I'm not going to go in full size just because it's riskier trading a stock that's under 5 million share float. And that's how I do it. And so once I identify, okay, this is worth me trading, cool. Then I go over to VRAX. I always start off on the daily. And so over here, the stock had already gapped up to 1 second. So when it was gapping up, it gapped up to almost $3. Okay, so cool. So you go over to the daily and you start looking to see if there is any levels that are close to the $3 area, because that's where it's at currently. If obviously this thing, has a lot of levels, but I mean, why am I going to mark in a level up here at $60 if it's trading at $3? So it's kind of, goes along with common sense a little bit. So $3, right? Okay, well, right here is a level. There's a level right there at, wow, that really sucks. I hate that. So there's a level right here at 283. Okay, cool. Here's another level up here at 550. That's a little bit high, but that's a really good level because it's damn near like a support. It's also the close of a gap and a ultimate high. Here's another level over here. This is the ultimate low, which is at $3.30, and it's recent. There's another level right here at $4.39. So then I go over here and I go to the daily. Okay, cool. So this thing's trading up, right? Pre-market, it rejects a daily level. It rejected right here, had its stuff, went all the way back down to the first target. All right, cool. Well, if you were awake at whatever time this was, you could take his stuff here and cover it all the way down here for a good win. So you'd have to be awake at 7:17 in the morning. If you were trading at 7:17, which none of the beginners should be trading, but you more advanced guys, you could have caught this trade. But Uh, it bounced. It did a nice little curl and squeezed back up. It did not stuff out and reject. It once it broke over this daily level, it turned into support. And it bounced and went higher. Okay, cool. Well, this thing went up. This thing is not going to be a setup for a beginner, but it's a very good lesson for you guys because it went through. It once again it rejected this level, this daily level right here, and could take a trade right there. The difference is it didn't hit the target. It once again it curled and broke through, and it's right before open. Okay, well now it's set in a pre-market level. Set in a pre-market level right there. So for you more advanced guys and you beginners, when you guys finally get to that level, this thing pops up and has a long wick. The second it sends that down, you take a short, risking the high of this wick, and you're looking for your first target. Once your first target gets hit, you would cover half. Your stop would go to break even. Well, this did not hit your first target, squeeze back up. How I personally trade it is I cut it off. I have 6 years of experience. I know how to read the tape and all that kind of stuff, and I got myself out of the trade. Another thing you guys want to factor in is the volume. On this first bar, it's trading almost 3 million float. It almost float rotated on the first candle. Then the next candle is over, anything over like 1.5 million. So the second big stuff came back up here. It stuffed out. It shook out all the guys that were short like me. It shook them out and then slammed back down and then melted. And when you start trading stocks, depending on what the setup is, this is a pop and fell, so it's different than a gap and extension, obviously. But you guys want to start to figure out how to go through the thought process. Okay, the first thing you do is you always are on edge trade. Okay, cool. For the beginners, the gap and crap is going to pop up. If you have one of these are all the gappers. But anything that sets up as a gap and crap, it automatically goes into my gap and crap scanner. Okay, once it hits the scanner, awesome. Then the next thing you look at is the stats. Like how big's the float? What's the short float? What's the institutional ownership? What's the insider ownership? Does it have SSR? How much cash does it have? Is it got any previous gaps? And if it does have previous gaps, how many of those close red? How many close green? And how can you make sure that this is a trade that's worth your time? Because if it's got 12 gap steps, great. What if it's got 1 million float? I'm not trading that. I don't care if it's got 1 million float or under 1 million float. I'm not trading that kind of stuff. When at the very beginning of my trading career, I tried to trade everything, and it didn't work out for me at all. And so I started to figure out what are the things that cause me problems. Anything under 5 million float is something that has the potential of causing me a lot of headache. And so for me, where I am in my career right now, it's really not worth it. So I just don't trade them. After you do that, then you go over, all right, well, where is it gapping up at? What level is it trading at? Okay, this thing is around the $3 level. Cool. Go to the daily. Is there any daily levels? And when you're looking at daily levels, you want to find stuff that are like key levels. Not just, you don't want to just go up and start clicking on, whatever. What I like to see is something that has a decent body candle, a long wick at either the top or at the bottom, because if it's at the top, it shows resistance. If it's at the bottom, it shows support. And I want to make sure that there's a level for me to start trading off of. And like I said, you go back as far as you need to. if there's 12 gap stats, that means that there's 12 potential levels for this thing to play off of. Okay, well, what I want is I want to have levels above it. It's like having ceilings. I want to have the more ceilings this stock has to break through before it's in like all-time highs, the better, because that means that there's previous bag holders. Yeah, this thing traded 90 million shares on this day, but I mean, hell, there might be, still a few thousand big orders of people that are just stubborn holding their position that could help you out, because if they're selling their long position, it also helps strengthen your short position. You want the stock to go back down. That's how you make the money as a short seller. And so when you have things that put the odds in your favor, that's the best thing you can do. And then you go to the 1 minute. This is what I use for my timing. I get the trade, and then once I'm in the trade and it's going in my favor, I always switch to at least the 5 minute chart, and I start looking at different things on the 5 minute chart. I also like the hourly, the 15, and those all change certain situations, but that's more advanced stuff. But once I'm in this trade, if you look at the first 5 minute bar, this first 5 minutes, there's over 9 million shares that's traded on this. Well, that gives me confidence to hold this trade, because if I'm in up here with a short at say 347 and I'm risking 362, when my first target hits, okay, cool. My stops break even, but for me, that gives me the confidence to just hold this position. And this is actually the trade. I want to share this as well. This is my trade. This thing goes up, just like I showed on the thing. I took a trade right at that level. It went down. The difference is this thing. I'm almost 50 cents in the money. So for me, with big size, I'm not trading the P&L, but at the same time, if I'm up 50 cents and this thing curls back up, I'm getting the hell out of this. I'm not going to take something that I was up 50 cents for every share that I'm using and turn that into a loss. And so I cut it break even. This goes up, stuffs back down. I slammed the bid. The second this went back down, and then I held it. Covered half. The other piece I covered over here. I would imagine that if I was around, because those of you that have actually been watching my material, once I cover here, if I didn't have my orders out there, I definitely have my order out there after this one. I like to have range orders. I don't want to sit here and babysit a stock all day long, and so that's how I personally do it. But this is basically, what I look at for a top-down analysis. It doesn't matter what the stock is doing. You have all these guys that are talking about, oh, well, the price action. Like, yeah, okay, well, the price action doesn't matter if you're in at the very, very top. Like I'm always teaching people, you want to think about stocks like ceilings and floors. Okay, well, if I'm up at damn near the highest level I can possibly be, I don't need to worry about anything. I don't care what the stock is doing, down in here. I used to when I was a very beginner, because I'd be adding here. I'd be well, look at this. This is a trend line break with the first target and all this stupid stuff. But it's why am I going to trade down in here for 20 cents when I have full size up here? And by the time I go full size from here to here, I already made my day. Really, I work a full-time job. I made more money on this stock going from this level to here in 10 minutes. I made more money. And so for me, okay, I don't need to be greedy. I just set my range orders in. If I get more money, awesome. I don't want to just cover everything here. If this thing has the potential to fade all the way down, like why would I not take that money? And so for me, that's the way I look at it. And I'm gonna have more of these videos where I want to teach you guys. You know, I look at trading thanks to my mind coach Steve Goldstein in three different pillars. There's a technical pillar, the performance pillar, and the self pillar. And so for me, in the free community, I'm going to be adding in a lot of technical pillars because that's going to be the main focus. You guys need to focus on technical stuff. You guys don't even worry about performance or your mind stuff until you've actually had some success. Because once you start having success, then we can start worrying about the performance. Then you guys can upgrade your subscription into the paid community and start learning about the performance side of things and the mind side of things, or just unlock it by adding more value to the community. But this is going to be the first thing. You guys can't understand what the setup is, how to identify your risk, how to identify your targets, and then follow the plan. All the other stuff doesn't matter. So I hope that you guys found this beneficial, and I hope you guys learned something. I'll see you guys in the next one.